Welcome to On the Ballot with Ballotpedia, where we connect people to politics by providing neutral, nonpartisan, and reliable information on our government, how it works, and where it's headed. I'm Frank Vesta, and thank you for being with us. Cryptocurrency has gone from the fringes to a major force in financial markets and public policy, with Bitcoin and other digital assets seeing a surge in value over the last several months. But a lot of Americans are still asking the same basic questions. What is crypto really for? Who's in charge of regulating it? And what does it mean for the future of money? Today, the United States still doesn't have quite a clear, unified framework for digital assets. Agencies like the SEC and CFTC continue to jockey for oversight. Congress has introduced, but not yet passed, multiple crypto bills, and the debate around stablecoins and central bank digital currencies is heating up while state lawmakers, advocacy groups, and even crypto super PACs have emerged. If that sounds like a lot of word salad to you, you are not alone. Crypto is still new and confusing to a lot of people. So we're hoping to break it all down today with the help of Chris Giancarlo, former chairman of the Commodities Future Trading Commission and co-founder of the Digital Dollar Project. During his time in government, he became one of the first major regulators to openly engage with the crypto world, promoting different types of policy and reforms, earning him a nickname that I think is pretty cool. I'm not sure if his kids do. CryptoDad. I thought that was fun to learn about. So, Chris, CryptoDad, thank you for coming on the show. It's great to have you.
Frank, it's great to be with you. Thanks for that introduction. When we were talking before the broadcast, you said you wouldn't ask me what crypto is. I actually think for us to have this conversation, it's worthwhile identifying what it is. And it's a lot more than just some speculative new asset class. Crypto is really a new architecture of finance. In the same way that the internet changed everything we know about how we share and gather information, crypto is going to change everything we know about how we gather and share things of value, whether those things of value are title or automobile or whatever we've managed to save up for retirement. Those things are going to be increasingly recorded on digital networks rather than the way we've been doing it for just the last few centuries, which is recording value on the balance sheet of individual bank institutions or individual government registries. What we've seen is that that's actually a fairly rickety way to store money. Isn't it kind of odd that everything I've managed to save up for retirement, you've saved up for retirement, is nothing more than an IOU from a bank? And if that bank disappears, that value is gone. Now, government may step in to guarantee it with an insurance policy called the FDIC, but only up to a certain level. That money is nothing more than an IOU. There's no $100 bills in the vault of Citibank that's backing my savings account. It's an IOU, and it's kind of an odd system. What crypto says is just as we've moved all information onto the web, right? We don't go to the library anymore. We just Google things, right? We AI things increasingly. Well, what crypto says is let's move value onto the internet so that it's not limited to one bank's balance sheet. It's available 24/7, 365, anywhere you can access the internet. So what crypto is a new architecture of finance. And just as, those old photographs in our dusty album are there, on the shelf, but we never look at them anymore. The photos we now look at are the ones that are on the web and on our phone and that we can share with each other anytime we want. So will our money be available anywhere we can access the internet through a phone, as opposed to, oh my goodness, it's 4:30, the bank is closed, I can't get my money anymore. So the internet is going to change everything we know about finance and banking, and that's what crypto is.
Yeah, and it seems like it already is changing so much. The rest of our society is moving in that direction. It certainly makes sense that our financial system would, at least in part, move in that direction as well. But I'm
W
curious. Go ahead.
well, it would be kind of naive to think that the internet that's changed everything we know about how we gather information, everything we know about, communicating with friends and loved ones, everything we know about, travel and entertainment and leisure, that somehow it's going to stop and not affect banking and finance. That would be very naive, wouldn't it? Of course, the internet is gonna change those things. It's just taken a little bit longer to get around to it.
Yeah, and a little bit longer makes me think of the question I was just about to ask you. Maybe 10 years ago or so when I was in college still, I do remember some of those goofy guys I was in, maybe an accounting class with going, "Yeah, Frank, like, I just bought some pizza with But the Bitcoin, like, you gotta check this stuff out.
Oh boy, they should have used cash and saved the Bitcoin.
Those guys are kicking themselves now, but that just goes to show how dramatically things have changed in the crypto space, even in the last couple of years, but even the last decade is really the scope that we're talking about. Where something like Bitcoin, the major crypto that most people are probably familiar with, was worth maybe a few dollars, maybe less than that, and now it's I think as of this morning, right around between $95,000 and $100,000, right? So it's surged in value. Give us a quick history lesson. I know going through all of those changes is quick in a short amount of time, but tell us what's changed from now to then.
Yeah, sure. So we probably spend too much time focusing on, number go up, is the price of Bitcoin up, the price of Bitcoin down. What I liken that to is the same way that 5 years ago, if you believe that the future of transportation was electric as opposed to petroleum based, then the way to express that view was to buy Tesla stock. And in many ways, I think if one believes that the future of everything, of banking and finance and money itself, is going to be internet based, then the way to express that view is to own Bitcoin or own Ethereum or own these other cryptos. And so there's a lot of focus, no question about it, on the spectacular rise of Bitcoin. I mean, Bitcoin has probably been the best performing asset, I don't know, something like 7 out of the last 10 years. So, of course, it attracts a lot of attention. But for me, as a former federal regulator, as someone who's been focused on this for 10 years, um, I believe the really powerful change is the crypto as a new architecture of finance. And what we're going to see, I think, I'm certain of, over the next 10 years, is crypto changing anything. I'll tell you and your audience right now, as we stand here, within 10 years, there will not be a securities offering, equity securities, debt securities, an offering of securities of any type that's not tokenized and on chain. Those old securities, your investments in the market that are still paper based, are going to be like those old dusty photos in the photo album that you never look at anymore. And they'll trade at a discount to securities that are on chain.
I just cleaned out my parents' house. They just sold it, so I was looking at a lot of those dusty photographs. Wanted to save more of them than I could, but probably could have if I digitized them. You said on chain there a couple times, and just want to get a quick definition for people because that blockchain technology is a big part of this argument for why cryptocurrency is, having major use cases in the future, right? So can you explain what you mean by that very quickly for us?
Yeah. So the core breakthrough was in a white paper that was published in 2008 by a pseudonymous writer called Satoshi Nakamoto, that basically proposed, why don't we link together, using the internet, all the balance sheets of the world's financial institutions and more, so that in a sense they could talk to one another. And I know that sounds odd, but that's basically what the internet does. It allows my computer to talk to your computer, to talk to my bank's computer, to talk to other computers. And if we can do that for information, um, what is finance other than information, right? What I've got in my bank, what the bank thinks I've got in my bank, what somebody who's sending me a payment for something is sending my bank. That's just all information. And if we link all that information and allow the different computers to verify that information, now we've got a network of finance, a digital network of finance. And that's what the blockchain is. And the Bitcoin blockchain, the beauty of it is it allows people to do all of that collaboration to verify financial information, but without requiring a major corporation to be in the middle to pay everybody to do this, because it has a built-in reward system. And the reward system is the reward people with Bitcoin for their collaboration to do all of this financial information verification.
You and many others have said that the United States risks falling behind if we don't modernize our financial infrastructure. I think it's a very common argument that you hear these days, and it makes a lot of sense. In practical terms, what are we at risk of losing if we're too slow to act? And what does keeping up actually look like, either in the short term, medium term, long term?
So, we have been, as Americans, we have been the beneficiaries of American dominance of the global financial system since the end of World War II. Um, our banks are the world's major financial institutions. They move an enormous amount of money around the globe. That money, for the most part, is the US dollar, which is used by countries to value and to settle major transactions around the world. And our financial institutions have been dominant in setting the terms. We were out in front of securities regulation in the 1930s before most jurisdictions, including Europe, caught up in the 1980s and the 1990s. And so the influence of our financial regulatory structures have been the standard of the world. Um, However, all of that is built upon a 20th century analog system of messages, and fairly clunky, slow, and friction filled architecture. I mean, as modern as things are today, if I wanted to get $5,000 from here to London, sadly, it's still easier for me to go to the ATM, get the money out, put it in a suitcase, and get it on an airplane, and it would get to London faster than if I tried to send a wire and go through a lot of our financial infrastructure, and that's even more true once you go further out into the globe. So, the so while we've enjoyed tremendous leadership in the old 20th century analog world, the world is changing, the technology is changing, and so we need to lead this new architecture if we're going to maintain our edge in terms of global finance.
If I understand correctly, part of the way you see that is through an effort you've helped lead with the Digital Dollar Project, if I have that right. I mean, for listeners that aren't familiar with that, I learned a little bit about it in preparation for this interview. Tell us a little bit about what a central bank digital currency is. Is that the same thing as Bitcoin? Is it different? What do you see the future of that looking like?
So the Digital Dollar Project is a nonpartisan, non-for-profit, a non-government funded, we fund ourselves, effort to address three key questions. First, how do we preserve the dollar into this new coming digital world? How do we ready it? How do we future proof it for this changing architecture? Number two, how do we do so in a way that preserves its reserve currency status, which has been a tremendous benefit, again, for the American economy? The fact that the world holds dollars means that they buy our debt, and that debt is used to fund our government. That's what reserve currency status means for us, and that's why it's so important to preserve that. Thirdly, how do we do this? How do we future proof it? And how do we preserve the reserve currency status while maintaining the values that the dollar has traditionally stood for? Values of free enterprise, free commerce, free individual autonomy to engage in the commerce one wishes to do so without government censorship or big tech censorship of our activity. And that's what the Digital Dollar Project stands for. We do not endorse the adoption of a central bank digital currency, but we do ask the questions around it at a time when Europe is adopting one, when China has adopted a central bank digital currency. Should the US be looking at this? And if not, what's the best path forward? Now, the path that the Trump administration is focused on is private sector development of a new digital architecture. And we very much support that. But what we ask the question is, we need to make sure that if if we don't want to have government surveillance, well, we certainly don't want to have big tech surveillance either. And as we learn from social media, some big tech companies are only happy to do the government surveillance for them or the government censorship for them. So we need to make sure that whether we move to a digital architecture, whether it's led by the government or whether it's led by American technology firms or American banks, that we still preserve the values that the dollar stood for, values of freedom from censorship and surveillance and ultimately control. Money carries the values of a given society. China's new digital yuan, which is a government central bank digital currency, is a control currency. It's meant to control its population. If a Chinese citizen criticizes the government, they will find that their money has been turned off by the government and no longer able to access a train out of their village or to access the internet. We need to make sure that whether our digital currency is operated by our government or whether it's operated by stablecoin operators, that it can't be used as a control feature for either government or big tech companies.
Yeah, a lot of good points there. I want to pick on a few things that people are probably familiar with before moving into some of the political campaign spending that you and I talked about before the call, and then some state and federal policy. But one thing that comes to mind with the digital dollar project, I do not think that it's directly related, but it's something that might have peaked up in listeners' ears while listening to you talk through it, is the crypto reserve, the national crypto reserve. I think that's a concept that's been talked a lot about, maybe a little bit less so recently, but does that have any overlaps with the digital dollar project? And if not, tell us a little bit about what that, what that actually means. I think it's talked about a lot, but it doesn't seem super clear for most people.
Okay, so it's not a hard and fast. Well, first of all, let me start from the following observation. Our government collects enormous amount of crypto every day, day in, as part of their law enforcement efforts. Bad guys are captured or stopped, and the government seizes a fair amount of crypto. One of the things that candidate Trump talked about was his frustration with the Biden administration that after they'd seize the crypto, they'd sell the crypto. And he said, look, had they held on to the crypto, we would have billions of dollars that we could use to pay down government debt and otherwise. So he complained that government shouldn't be selling seized crypto. That raises then two issues: crypto stockpiles and crypto reserves. And they have a slight different connotation. Since the beginning of time, we know going back to ancient Egypt, governments have been stockpiling commodities. Ancient Egypt stockpiled wheat and corn. Today, governments like the United States, like China, stockpile an enormous amount of commodities. China stockpiles pork, stockpiles rebar, stockpiles copper, stockpiles petroleum. The United States stockpiles and reserves petroleum. So governments do this with commodities all the time. They do it for various purposes. The simple one is simply in times of need, they can release the stockpile and it can be used by citizens. But they also use it for strategic purposes. The United States petroleum stockpile is more than a stockpile, it's actually a reserve. And here's where a reserve is different than a stockpile: it's used for strategic purposes. We use our petroleum stockpile to actually adjust the world price of petroleum. We buy and sell to affect the global price. The Biden administration sold down our petroleum reserve dramatically to attempt to bring down the price of oil running into the last election. Um, uh, since the dollar is in part based upon the global price, there's also a monetary impact. And that's why the Trump administration has says we are going to stockpile different currencies, different cryptos, but we're going to reserve Bitcoin. And the reason why we're going to reserve and use Bitcoin strategically for monetary policy purposes is because a number of countries have announced they are going to experiment with a new digital currency that's based upon Bitcoin. And so by having a reserve, we now have both an offensive and defensive capability to protect the dollar in a new global digital world. So it shows a lot of strategic thinking and also recognition that Bitcoin is moved into the realm of being um, having monetary policy impact. You know, from the beginning of history, most currencies have been stabilized with a commodity. Often that commodity is a metal commodity, silver or gold. It's only in the last 50 years or so, since the United States went off the gold standard in the 1970s, that the United States has experimented with having a true fiat currency not anchored to any commodity. Now, some commentators will argue that no, the dollar still remains based upon a petroleum commodity, but it's still a physical commodity. When in 2017, as chairman of the CFTC, I greenlighted the world's first Bitcoin futures, we were focused on the fact that in the future, commodities not just physical commodities, but in fact, digital commodities may become anchors for currencies. And I wanted to make sure that the global Bitcoin price was set in dollars, not in any other currency, because the time may come when once again we return to a commodity stabilizer for our money. But this time around, that commodity may be a digital commodity, not a physical commodity.
Yeah, and all that context is super relevant. So thank you for spelling that out for us. And you mentioned President Trump a few times there. I think it is well understood at this point that his embrace of cryptocurrency has led to a lot of the booms and new developments and new conversations that we've had over the last couple of months. I think, as we mentioned before the call, we saw record breaking spending from crypto related companies, individuals during the 2024 election cycle for both parties, but largely for Republicans and President Trump. What do you make of that growing influence of digital asset firms and the advocacy groups in federal races? And what do you think that impact might have on policymaking?
So it's really interesting. Crypto was not political when we started looking at it in Washington in the last decade. I was very focused on crypto during my time at the commission from 2014 to 2019. And the divide in Washington wasn't between R's and D's in terms of their interest in crypto. It was really more generational. If you were to ask me, point somebody out and say, "What do you think this person's opinion on crypto is?" I could almost use a rule of thumb. If they were 50 and older, they were probably skeptical. If they were 30 and younger, they were probably open to it, and something in the middle. What changed was when the FTX blow up happened. Um, FTX was a major contributor to political parties in Washington, openly um, uh, more to Democrats than to Republicans. Although probably covertly there was a fair amount of contributions to Republicans as well, but the reaction of the political parties was very different. The Democrats seemed to rally around Elizabeth Warren and Gary Gensler and other leading Democrats in a let's suppress crypto approach. And that led to an unannounced but very official policy of the Biden administration to debank crypto firms and crypto founders. It led to a regulation by a enforcement approach by the SEC, where they were just basically suing firms right and left to chill them in place. And it led to a real policy of crypto hostility. And, in politics, every action gets an equal and opposite reaction. Trump read the tea leaves on that and realized this was an opportunity, and dove in headfirst. Um, now, I think some of that reflected the right side of the aisle's greater embrace of market-based economics. And so I don't think it was entirely political, but I think the political pendulum had swung so far in the Biden administration against crypto that it resulted in a reaction. What's been surprising to me since then is that the Democrats have not recalibrated that negative, at least the leading Democrats. I think there's people like Richie Torres and others that are pro crypto, but it's still right now as we stand here in second quarter of 2025. I think the Republicans have managed to own the crypto advocates, and it's a very young bunch. So it probably has a long term it's a long term gain in support for Republicans in embracing this. And you can't stand in the way of change. This isn't going away. And so I think that Democrats are going to have to realign on this unless they're going to lose this issue long term.
Yeah, I think that makes perfect sense. And I think I would love to talk about some federal policy, but first, I think I love the concept of the states as the incubators, the labs where they're trying to figure out and tinker with things.
Yeah.
We're seeing a wave of different types of crypto related laws, mining regulations, or sandbox programs, sometimes outright bans, states trying to make some crypto reserves as well. What do you view, or how do you view this patchwork of the state level approaches, and what role should the states be playing in shaping digital asset policy?
Well, I think it's one of the great features of the American economy and American society. This notion as the states of laboratories of innovation. And a lot of it's been led out of Western states, states like Wyoming and Idaho and Montana and others. But it's also come from some, deep red states like Florida and Texas that had been leading the way on this. And some of it is frustration with the hostility to crypto that was present in Washington for the past 4 years. And some of it is just the states doing what the states do well, innovating this. There's bills moving in Congress right now to create frameworks for stablecoins. Stablecoins are type of crypto that are stabilized or anchored using the U.S. Treasury using Treasury securities to make sure that they maintain a one for one exchange rate with the U.S. dollar. um, those bills in Congress, one of the big issues was whether the states would also be able to license stable coins. And it looks like that's been resolved in favor of the states continuing to play a key role in stablecoin development, which I think is a very good step forward. Stable coins are going to be a very important part of our future. They are, in a sense, you might look at them as like, when you go to the carnival and before you can go on any of the rides, you first buy a series of tickets at the ticket counter, and then you use the tickets to go on the rides. In many ways, stablecoins are your tickets to engage in electronic commerce using crypto on the internet.
I love an analogy. That was a good one. I'm getting ready for summer down at the Jersey Shore, so that was a
So you know it well.
yeah. I appreciate that. Let's move on to some federal stuff. So, and again, thank you so much for your time. Just a few more questions for you.
My pleasure, Frank.
And so when it comes to federal policy, there's still a little bit of confusion over, which agency oversees what. They're trying to figure it out. Talk to us, you don't have a crystal ball in front of you. Talk to us about those developments. Do we need a new regulatory framework or an agency to handle these assets? And what do you see, down the pipeline? What are they working on now?
So, Frank, I spent 30 years in the private sector before going into government, and spending 5 years in Washington as the head of a major regulatory agency was a real eye opener in so many different ways. And one of the things I learned that the first element of every piece of legislation is basically apportioning amongst the legislators which agency has authority and therefore which committee of oversight gets authority, and which committee of oversight means which committee gets the campaign contributions of that industry, right? So crypto has demonstrated that it's an industry that can pay large financial contributions. And so the debate over which Washington alphabet soup agency and ultimately which congressional committee gets oversight is blood sport. I mean, that's an important that's almost the most important thing. So if you look at some of the piece of legislation moving through, some of the biggest fights are amongst the congressional committees, who's got oversight? Is it the ag committees or is it the banking committees or the financial services committees or the appropriators? And then secondly, what's the balance between the Fed and the states? Because if the states get some of the oversight, then they get some of that campaign contribution. Now, I'm sorry, I don't mean to be cynical. I'm a proud and patriotic American, but this is the way things roll in Washington. I spent enough time there to observe it. And so when you look at legislation, the first issue to look at is which committee gets oversight. That's the big Megillah in terms of the debate.
Cynicism and realism are sometimes the same thing here, right?
They sure are. In politics, they go together.
Yeah, hand in hand. So we talked a little bit about the short term, but zoom out a little bit more, looking ahead maybe 5 to 10 years. Donald Trump's second term here just is past the 100-day mark. He still has a lot of time left to get some of these policies developed. And there's no doubt we're going to see a ton of change over the next 4 years. And then further out, over the next 10 years. So for the industry, what does success look like?
So it's going to happen really fast now. It's happening really fast. So one of the things that the Biden administration hostility to crypto did is it gave cover to every CEO of traditional finance, our traditional banks and financial systems. It gave them cover to not have a crypto strategy. What's happened is that cover has been ripped off, I would say that any CEO of a traditional financial firm that doesn't have a serious crypto strategy has got serious reputation risk and better be looking over their shoulder at the junior members of the executive team that are going to push them out of the way. This is the year that we're seeing traditional finance move in a very big way. So, the head of Bank of America, Brian Moynihan, recently said that once this stablecoin legislation passes, they are going to introduce a stablecoin. One of the ways banks make money, aside from lending, is that they move money around the globe. It's called correspondent banking. The way that banks move the 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 trillions of dollars that are moving every year around the globe is they move it from one bank to the other through what's called the correspondent banking system. Well, that's going to be completely displaced by stablecoins in the same way that I'll use another analogy. Once upon a time, photography, you traveled around the world, you'd see these Kodak shops on every street corner because you'd go get your film and you get your film developed and you take it from one place to the other. Correspondent banking is like those camera shops, and once digital photography came around, you took the picture and you send it back home to grandma the same minute that you were taking that photograph, in at the Louvre in Paris. And so, stablecoins are it's gonna challenge the bank's role in moving money around the globe, dramatically. And so traditional finance has suddenly realized that Washington is no longer a barrier to innovation. They're now encouraging it, and the banks are now moving in a very, very big way. And so those all those new entrants that have come up in the last 10 years are suddenly going to find they've got major competition from some of the biggest Wall Street banks.
Yeah, and just to close the circle back to a little bit of cynicism, I know that you said in the beginning, and I agree with you for the most part, that we shouldn't be paying too much attention to fluctuations. We saw, a lot of these crypto prices mirror the developments in the stock market over the last couple of months, right? But I think there is still obviously a lot of hesitancy among the general public. What sort of road bumps are you looking out for in the next couple of months as things develop? Are there any hiccups that could be presenting themselves to hinder the progress here?
Yeah, well, first of all, crypto is going to remain quite volatile in price. So, I tell people all the time, do not put your rent money into crypto. If you need the money in the next 90 days, don't buy crypto because 90 days from now, the price could be way down. Long term, however, it is the future of finance. And so, if it's not your rent money, but it's money you can put aside, I think it's part of a balanced portfolio. And now we're seeing all the major wealth advisors also tell clients that as part of a balanced portfolio, some portion of crypto makes sense. Is it going to be a rocky road? Yeah, innovation always is. When there was something called, I don't know, Frank, it's not probably before your time, but you were young then, the dot-com bubble that built up in the late 1990s that burst in the year 2000. And when it burst, there were articles in Time magazine calling it dot bomb and saying that, you know what, people are never going to use e-commerce. Well, it wasn't that people didn't want to use e-commerce back in 2000, but they didn't want to use it using a dodgy dial-up modem, putting their credit card information into some website they didn't know where that information was, and waiting 4 weeks for the arrival of whatever it is they purchased online. It took the development of PayPal. It took the development of 3G, 4G, 5G technology, and it took the development of Amazon delivery and other delivery services to make e-commerce a reality. When the dot bomb happened in 2000, there were less than 300 million people in the world using e-commerce. But 20 years later, there's 6 billion people using e-commerce in the world, and it's part of our daily lives. And during COVID, we found the only way to shop was through e-commerce. And so it took 20 years to make e-commerce a reality, but it's very much a reality today. Um, I think this evolution is actually not going to take 20 years. I think within a decade from now, digital networks of value are going to be the way we move value around the world. And the old banking system of, oh my goodness, it's 4:30, the bank's closed. I've got to wait till Monday to get access to my money. I think that's going to be a thing of the past. In the same way that those dusty photos in the old album, they're lovely to look at, but they're kind of like an archaic thing when you go out to dinner with your friends, you whip out your phone, you show them the photos you just took yesterday, or you send it to them. It's going to change everything we know about banking and finance and money itself.
Yeah, and this has been a great conversation. Chris Giancarlo, thank you so much for your time. I learned a ton. Hopefully our listeners did too. Tons to watch here and exciting to watch it all develop. So again, thank you so much.
Great talking to you, Frank.
And for our listeners, you can learn more about our emerging cryptocurrency and digital asset coverage at the link in our show notes. Make sure you subscribe to On the Ballot wherever you listen to podcasts. I'm Frank Festa, and thank you for listening. We'll see you again soon.